we're going to continue our series on investing today, and we're joined by a very special guest. We've got Brent in the room.
Hello, everyone.
Welcome. Thanks for coming in and sitting with us today to talk about property. So today specifically, we're going to be focusing on property investments, and more specifically, the buy-to-let market. Now, Brent, if you can just tell us a bit about yourself and your story.
Well, first of all, thank you both for having me today.
No problem
Appreciate
at all.
you bringing me onto your platform. Brent Sargent. I was born in the Caribbean island of Montserrat. Moved to the UK when I was 9. I went to University of Kent, where I met you guys, and studied economics. Then from there on, I went on to Nottingham University Business School. I did a degree in finance and investment. Since then, I've been working in the city within different operational roles in investment banking. And in the last year and a half, I've been investing in property.
Awesome. Nice. Good to hear. Can you just, before we delve into it, can you just sort of tell us why you got into property investment and specifically why buy-to-let?
I can tell you why. I was at a point in a couple of years ago where I had saved up a bit of money, and I also paid off some debt from university. And I was like, well, I have this pot of money. What am I going to do with it? And I was honestly between two things. One, am I going to buy a car, or am I going to do something else with it? So I was on the train, and there was a advertisement for a networking event called Success in London. So I said, let me go to it. So I paid the money, went to it, and one of the courses advertised was a property investment course. And I said, that's what I want to do. So I went on the course. I did about 18 months of training, and from there on, I subsequently took the training, took the advice, the mentorship I was given through the program, and started investing in property.
Wow, 18 months, so it was quite a rigorous process.
It was 18 months of taking time off work, going to different areas in London, up north as well, and looking at different opportunities.
You put in extensive research. You didn't just come in and say, I've got this money, let's go.
That's the first thing. The first thing I learned from the time networking and this at the event as well is that the most beneficial thing you can get is knowledge. So I used a lot of my time to get market research, get on the floor, talk to people about areas I was looking to invest in, and before putting any money down. So I spent a lot of time gaining knowledge.
And what sort of things were covered in the course?
On the course is they gave an overview of particularly what you want to invest in, what type of strategies there are, and progression of how a good portfolio would look. I taught things such as becoming a property sourcer, how to run a property business alongside of it. So people started letting agencies and state agencies alongside doing their property business and their portfolio, and so these are the type of things.
That's cool. So you mentioned about different strategies in investment. So with the buy-to-let, why does it represent an attractive investment opportunity?
I think with buy-to-let, very good question. With buy-to-let, it's a strategy which you can use along any time frame of you want to invest. So if you have a period where you want a 1 month period, you need income every month. It can be used to adapt that to supplement income. If you want a medium term, if you're looking to build up to something like a wedding, you can use buy-to-let income to do to that. And also, if you're looking for longer term, so sending kids to university or pension, it's also used for that. So buy-to-let model can be for what you need income for. It can supplement a lot of income over a longer time frame.
So in terms of that, you hear scare stories of buy-to-lets in terms of, is it something? Do you use estate agents or do you manage your portfolio yourself? Because you get people that say when they done it themselves, the type of tenants they've got in ruin the house, etc. Has it been with you?
That's a very good question. With that, it depends on the location. So if you live here and the property is across the road, that's pretty much, you can self-manage that, and then you have the responsibility to do the checks yourself. And get references from previous landlords, see if they are currently employed, how long they've been employed for, things like that. But for myself personally, I don't invest anywhere near where I live, so I go through a management agent. I build that into my fee. So that's what I use to manage my properties, and a management agent, because I'm not in the vicinity of where the properties are.
Okay, that makes sense.
Yeah.
Next step, what I really want to do now for our viewers is literally just break this down, simplify the process. So, number one, what was the starting point?
Well, starting point in property, after getting the knowledge, I always tell people, get the knowledge. Anyone can go and buy property. And once you have the capital, anyone can go buy property. But it's get the knowledge first. Then once you get the knowledge and you know what you have to do, then just go out and search the area. So find what strategy you want to do first. So some people want to do buy-to-let, some people want to do commercial, some people want to do HMOs.
HMOs being
houses of multiple occupancy, which you have you rent out per room as such.
Okay.
And do those different strategies. So I found the strategy which works best for me, which was buy-to-let. And then I went and I found a particular area. So I looked at different areas around the UK, and I went and spent time there talking to agents, talking to local people, seeing how many shops are there local schools. And then once you find the area, you then find the property.
Okay.
So it's called a SAP process: strategy, area, property.
Okay.
To manage it.
And the areas you're invested in right now currently?
My initial training and my initial area was Liverpool. I had moved from Liverpool to Stoke-on-Trent.
Okay.
Yeah.
Awesome. So after finding the property, tell us what's involved. Is it then to then secure a mortgage? I mean, what are the criteria for securing a mortgage? You know, what kind of rates of interest you want expect? Because obviously, when you borrow money, mortgage is basically borrowing money to buy property.
Yeah.
You're gonna have to pay interest on that money. So just talk to us about that.
So
process.
with regards to so there's the process we go on about is to know how much you're gonna pay for the property. Doesn't matter what they've been advertised for.
Okay.
You make money in property when you buy. So you buy we try to buy below what's called below market
value.
Yeah. So they're more market value. So I put my number in. If that's accepted, then go through the process of get in contact with a solicitor, then from a solicitor, a mortgage broker as well, and let them handle the things between them.
Yeah.
So with a solicitor will be responsible for doing searches, they'll be doing the changing of the
What type of search?
So searches for the particular area you're in, what type of things need to come up for the surveyor to look at as well. So searches for is it coal mining area where there's things such as red ash, we'll get into a bit later, which can affect the foundations of a property. And they will do those searches on your behalf and then do the registration onto land registry on your behalf as well. Yeah.
Registration on land registry, what do you mean?
So, okay, so land registry is basically the information hub for property in the UK.
Okay.
And so every person, if you own a property,
Yep.
that property will be then put onto land registry, and the solicitor will then do that once the exchange has happened.
Okay.
Yeah.
So you mentioned that you will find a legal representative
Yes.
and a mortgage broker. Don't you have to first secure a mortgage in principle before carrying out that SAP process, or is it the other way around?
No.
Okay.
So what you do is you as an investor, we will talk two things. First, you find the money, then you find the property.
Okay.
Once you do that, you should be okay. So with regards to finding a mortgage, you look at the different brokers available. So you would your network and ask people, can you recommend a broker? Or you go onto the web internet and you search brokers in your area.
Okay.
I personally use an independent broker, not tied to a particular bank.
Organization.
Yeah, to tell you why is the fact that independent brokers have a bigger scope
Portfolio
of the market,
yeah,
so they can see more than just one type of mortgage product.
Okay.
Yeah.
I see what you mean.
Mhm.
Just quickly, before I think Nick has a question for you, I was going to ask you what you said you need an amount of money to get started. Tell me what size we're talking about here. Just give us a ballpark figure.
This
Some rough estimate.
so the first property I bought cost £70,000.
Wow.
Yeah, so that cost £70,000, and the deposit was about 22.
So you needed 20% of the value of the
25% of
property.
the value.
25%.
Yeah.
Which then roughly sort of works out to, my maths is
Yeah,
roughly
so
about 14, 15,
Yeah,
16,000. Okay. Okay.
So then I think what you're then showing people, because then most majority of us live in London,
Yeah.
there is opportunities
Massive, yeah.
outside of London.
To then diversify your own portfolio and make money. So instead of, I said, you could have just potentially let that little money that you've made just sit in a bank
Exactly.
and earn interest, but then because of inflation, you're actually earning nothing. You've then gone outside of your comfort zone, looked and gone up north, and you found something of relative that you can then turn and produce your property portfolio.
Very good. And because we live in London, so when you live in London, you think property prices are
yeah,
you know,
that's
astronomical. But when you go outside, you go to the Midlands, you go up north, you see that property prices are fairly very cheap.
If you're, and I think that brings it back to what you're saying about the knowledge and research.
Yes.
If you've done your knowledge and research, there's potential to do. No, that's good.
Just a couple of questions. Number one, why Liverpool and Stoke-on-Trent? Because you obviously done the research, so I want to know what was the strategy behind picking those areas. And two, I don't want you to also explain the sort of additional costs involved in
buying her like stamp duty, etc.
Cool. So my strategy was buy to let, and I wanted a good yield on my investment. Yield meaning the amount of money I get from rent divided by the cost of the property. Yeah, that gives you a percentage. I wanted about 10%. In looking at the different areas in the UK, Liverpool and Stoke-on-Trent tick those boxes. So I was there, and I've been there for the last over a year now, 18 months. And with regards to the buying process and fees involved, you have solicitor fees. So solicitors need to get doing all the administrative work for you. Yeah. Because I use an independent financial broker, he also gets a fee. He also helps with the survey on the property, so then that's an additional fee there.
A survey.
So when you get a new mortgage or lending on a building, the bank needs to know what they're lending on, and they need to know the condition of it. So they will send out a surveyor. He will then do an analysis. He will let the bank know on his findings it's good to lend, basically.
Okay.
So would you? I think a lot of people don't. Would you factor in these costs?
Definitely.
I think people just think I need to have the deposit for the house,
no, you need to.
And then once you realise, you said there's other costs associated to becoming a homeowner or buy to let. So your recommendation is you'd have to secure a mortgage, but also think about the fees incurred from when you're doing your search.
And in your experience, roughly how much did those fees come to?
Broker fees, I put everything, broker fees, solicitor fees, and any other costs, surveyors, about 1,500.
Okay. And then how much was stamp duty as well? Because you have to pay
3% stamp.
Okay, so can you just explain what stamp duty is for our viewers?
Okay, stamp duty is just the tax on the purchase of a property.
Yeah. Okay.
Now, since 2016, the 1st of April, the buy-to-let market has seen a 3% increase over the residential market in purchases. So if you buy a house up to £125,000, that's 3%. From £125,000 to 250, that's then 5%. Then from 250 to 925, I think it's 8%. From 925 to 1.25 million, it's 13%, and then 1.5 million for is 15%.
Okay. So the cost can really
exponentially grow after. Yeah.
Okay. Next question for you. You said you're focused primarily buy to let because of the rental link and the yield. Tell us. You said you usually aim for about 10%. Is that realistic? Is that what people should be aiming for? Is that very area dependent?
It is area dependent. Okay. Let's say somewhere up north where you have a good rental price compared to the actual purchase of the property, you should find those incomes. If you look at somewhere like London, you won't find as good. That price. There are realistic ways to get that. Okay. Obviously, you have to factor in as a buy-to-let investor. Periods where they were known as void periods, where you don't actually have someone in the property. Yeah, so you do have to factor that in. So that's when your relationship with letting agents and other people within the area comes in hand.
Because then you're paying the mortgage without having any income to actually cover that cost. Right, okay, so that sort of voiding period, is that how long can that last?
That's why the research comes in
for the area.
So if you go into an area and no one really rents there, or
what's the point? You're just wasting money.
So you go into an area, you speak to letting agents. So what I do beforehand, when I was going into, for example, Stoke-on-Trent, I would phone a letting agent and say, I have a house on XYZ road. How quickly could you get that let? And she said, I have people ready to go. So that's the type of things you got to look in beforehand. Yeah.
Okay. So before, I just want to cover a bit more on the fees, and then come back to the income aspect.
Okay.
The fees, letting agents' fees, what can investors typically expect to get?
Average in letting agent charges 10% of rental.
Wow, okay.
Yeah.
So if you now Give us an example. How much are you collecting in rent on the property?
So if you factor in, okay, so if you get say £500 rent,
Yeah.
you then have to pay £50 for the actual management of the property.
So that's the lettings fees.
That's lettings fees.
So that's 10%.
And then I have a contingency fee of about another 10% in case I need to
Anything
if
happens.
happens.
Okay.
And then you pay the mortgage depending on the price of the mortgage. So after that, we then get a
The yield.
the yield. That's
Okay.
but which it's actually better to yield is one aspect of it, and another one to look at is actually return on investment.
So you're talking capital appreciation of the property? Or
Capital appreciation of what costs the money you get minus the cost of it divided by the money you put into the property.
Okay.
That gives you another figure called return on investment. So how much you've actually put in to property get taken to how much you're going to get out.
So in terms of by saying what you're putting in, you're talking about the maintenance, any home improvements that you make, or
also just the actual cost. So your deposit. The cost of
your initial
investment. So the money you get from rental minus all the costs divided by the cost you actually put into the property, not actually excluding the actual loan from the bank. So your personal return on investment.
Okay, I see. So that deposit that you initially put in, that makes sense.
Mm-hmm.
Now, as you quickly hit on it in terms of maintenance, so that can be, as you said, because you're not in that area, so are you relying solely on the letting agency to update you, to tell you what's going on, what's needed? So in that, do you protect yourself? Do you have any insurance or anything as well to protect?
The insurance I have is there's insurance you can have if you have a tenant where you think they won't be able to pay. You can get rent guarantee insurance. But there's also the one that all investors must get is landlord's insurance, which is protection for the building. So which covers roof damage, infrastructural damage to the building. That's the
also include contents covered if you want.
Yeah, so there's separate contents insurance.
Okay.
But what we've done so far is that we just rent out, and then people come in and they want to furnish themselves. So we don't rent our personal.
So you rent unfurnished. Okay. We're gonna take a break right there, and we'll be right back, guys. Hi guys, welcome back to the second part of our episode on property investment. We're sitting down today with Mr. Brent Sargent, discussing the buy-to-let market and how to get started in property investment. So Brent, can you just tell our viewers again about who you are?
Hello everyone, my name is Brent Sargent. I am a economics graduate and a finance and investment graduate, and I've been investing in property for the last 18 months in the Stoke-on-Trent area.
Awesome, thank you.
So Brent, before, and we were talking to you earlier, we was discussing insurance on properties. So what type of insurance can you have in order to protect yourself?
Yeah, so you can have insurance around building insurance.
Okay.
That's the main insurance landlords have to get.
Yeah.
You can also have contents insurance if there is any sort of damage to your contents whilst someone's living in your property. You can also have insurance around rent guarantees. So if there's an issue where the tenant is not or cannot pay you, you can protect yourself that way as well.
So that's a good question. So in circumstances such as that, where tenants can't pay you, you say you can protect yourself with a rent or income guarantee. But what other avenues can you go to protect yourself against tenants in terms of non-paying fees, non-paying of rent, etc.?
So with regards to tenants, again, I say it starts with your relationship with the letting agent. How will they get in there? Your responsibility is to check them, how many people they have on their books, how many voids do they go through, and basically do they do the necessary checks. Also with regards to tenants,
necessary checks
behind with regards to whether they're employed, whether they're have circumstances which means they cannot pay.
And also the credit history.
Credit history as well. Credit history is one of the most important things, and I think you need to have them check as well, because it shows up probably records with regards to bankruptcy where you cannot pay. Have they been taxed? Have they paid their taxes also? So that's another thing that they check for you. And then there's processes of if someone cannot pay and someone cannot continuously pay you as a landlord, if it's an investment. So you may have to go through areas of where you have to take it to the next level and maybe evict tenants, which is, something you don't really want to do. But
it's quite difficult.
It's very, very difficult.
But you need to protect yourself as well at the end of the day.
Okay. And I've also heard that you can take them to like small claims court, like they can be issued with something called county court judgments.
Yeah,
or
CCJs,
the payment. Okay. I want to quickly touch now on the legal structure, not legal cost, legal structure. What I mean by that is I've heard people can approach property investment in a couple of ways.
Mm-hmm.
So they can just do it direct as an individual, or they can buy that property in a company's name.
Yes.
So they can set up a company, put the property in a company name, and then be like shareholder or director of that company. Why would someone want to explore this alternative avenue? What are the sort of the cost benefits, so to speak?
Cool. Yeah. So the best thing when they will advise when we're starting property investing is to look at the actual structure of your company. Okay. So you can get the most simple company structure to have is a sole trader. That's where everything's basically in your name. It's a lot easier to do the accounting on it. It's a lot easier to get mortgages because for the buy-to-let world, they like to let to people who are sole traders, people inhabiting your name instead of a company's name. The cons against that is that there's no real protection, so everything goes against you in case of any sort of damages to the property or anything like that. So that's why someone would do a sole trader.
So, and when you say go against, do you mean in terms of if anything happens financially, so in terms of say you've got your own mortgage on your house. Could they then technically, if say you get into trouble yourself, could your house then become an asset for?
Exactly.
So okay.
Come against you personally. With regards to limited company structure, it's mainly seen for tax purposes. And again, I'm not an accountant, so I won't give the whole tax structure behind it. But if you have a company such as where you're looking to do what's called a flip. Now, a flip is when you buy a house. You do renovations to it and you sell it on for capital appreciation. If you have that in a company structure, you're paying less tax, so you just pay corporation tax.
As opposed to capital gains tax. And the corporation tax rates are
lower than capital gains tax.
I see. Yeah. So it's really for tax purposes.
Tax purposes, you can do that.
Okay, that they do that. Are there more hidden costs to having it in a company structure? So I know you mentioned that it's harder to secure a buy-to-let mortgage if you're buying a property in a company name as opposed to your name. But are there any other do the other costs go up, like suppose or the estate agent's fees or any other things like that?
Not particularly. Just because it's a public company, you don't have to submit accounts, so your accounts are available to the public. If it's in a limited company, so they do know how much. Well, there's a basic transparency there to the market of how much that property is made. You may not want that.
To just do a search for your company,
and you can see how much I've turned over and that. But there's also some people don't really have it in their name or such, like ABC Limited. So those costs of having it there, that the accounting is a bit more difficult as well. So those are the type of hidden costs you have to do. So you have to pay an accountant to do all the fees, the numbers behind it.
Which is quite a bit of a regular inspiration. Accountant myself, so I can imagine.
So just bringing it back now. So when you've mentioned that how you got started, you had a little pot of money that you decided that how you wanted to use to make the best out of it. How would you get started and how would you go about raising the funds to, say, think back to those 18 months ago, how would you go about getting those funds to be able to start property investing?
Well, there's a number of ways you can save up the deposit. One way you could do is just traditional put money aside every month. Another way is get a pen and a piece of paper, write down 10 people you know and trust, and ask them if they would like to be your angel investor into a property deal. So, and that's actually how I was able to actually fund one of my first property. Angel investor mother came to
that's good. But that's true. That's good. Like use around you. Think about people close to you who you can trust as well. They can trust you. Exactly. Use your network basically, and that's a very good way of getting started.
Yep. Anything else?
There's also ways if you want to stay within property and also continue your knowledge and still gain fees from that. You can become what's called a sourcing agent. So what sourcing agents are, they're kind of like they're kind of like an estate agent. They go out, they have marketing in their particular area, which they have people coming to them wanting to sell their property. So they may have an ad in a newspaper say, sell your house fast. And people may want to call them up and sell their house through them. Then they have on the other side, people looking to buy property and just put the two together. Now, in the last year and a half, 2 years, there's been a lot of, stringent look at the sourcing agents. And there's a few requirements you need to have. So because of the fact you're acting as a middleman, kind of like a broker, you have a lot of, the Office of Fair Trading really wants you to set up yourself for, first of all, anti-money laundering, because people use your private buyers as a way to, exactly. So, and they also need you to set up with the financial ombudsman, which is the regulator for property in the UK. And another thing is data protection, because one way in which you can protect yourself is you're asking the people who are looking for properties for proof of payment. But since you're doing that, you also need to protect yourself. So you need to set up for data protection and everything as well.
I see. So it's becoming a lot more regulated.
It's regulated. It's becoming more regulated. But it's also a good way to get into area, get money in property from the fees, but also know the area you're in. So you're looking at property, you're talking to people, you're networking, and that's also build up your knowledge that way.
Okay, I have a quick question before we start wrapping up. Once you've got your first property now, you're now putting part of the rental income you're receiving away, and now you're thinking about making a second purchase. I know you've already done it. What is that next step like to then requiring your second home, your third home? Did the costs now go up? You don't know, because it also as a buy-to-let, or can you just explain that process?
The costs don't really go up as such. What then becomes, this is the thing about property. What happens is that the more properties you get in the buy-to-let market, lenders become very skeptical to lend to you. Because of the fact that, and it's kind of the reverse of any market I've been in, because the more experience you get, the less they want to lend to you for the buy-to-let area. Because buy-to-let, they want it to be, mom and dad having 1 or 2 homes on the side. They don't want it to be a massive area for landlords or such. So you then look to, if you can't get buy-to-let mortgages, you can then get commercial buy-to-let mortgages. So commercial being seen more as for a business aspect, but they have higher rates and lower. Which regards to the monthly interest rate you pay on, and they also have a lower what's called loan to value. So you need more of a deposit for those properties.
Can I ask a question on that actually?
Yes.
So in terms of for commercial, do you have to have? So we spoke about setup before. Can you do that as a sole trader?
Yeah.
Or okay.
It's commercial, but with commercial, it's a lot easier to lend to a limited company because of the fact that they know as a business. So it's mainly done with the rental income and projections of that.
And with commercial, how do you define a commercial property? Because I know it can be a bit of a...
Commercial is a commercial property is basically a business not like your normal buy-to-let. So it's something which has some sort of maybe licensing to it. So licensing. The building needs to be has a normal regulation. So a building may need to have fire proofing on it.
Okay, so it's more regulations
around the business, the building.
But it doesn't have to be a commercial property in the typical sense that it's like commercial venue where people, like businesses operate from. It can actually still be a home. It just has to have all these extra additional requirements. I see. Okay. Cool. Finally, before we wrap up, you're in the property world, you're in property investment. How does this compare? The return that you're receiving to other traditional forms of investment like the stock market? I mean, what, from your opinion, what has been...
Well, the property market comparing to, my research, the long-term projection return from stocks is a lot more potential returns in the stock market. However, with property, you understand the business a bit more in the sense that you put someone into property and they pay you rental income. With the stock market, there's so much which goes on with the management takeovers and this and stock prices go up and down so often. It's the uncertainty near term. It's a bit.
So I guess in essence, like you're doing your own homework with the properties. As in the stock market, there's other external factors that you can't control that determine your level of returns potentially. Where with what you're putting in with the property. You can physically see what's going on rather than relying on the external factors.
Cool. Is there anything else you'd like to add for our viewers that can,
Yeah, definitely. I mean, one thing I would like to say when anyone else get into investing, do gain the knowledge first. Just don't go out and, that's a lot of people get burnt. To go out and want to buy a property.
Yeah.
Do your research and get the knowledge, get the training, get the mentorships if you can. But then the next step is once you got the knowledge, then do it.
That's true.
Take action.
That is.
A lot of things where we don't achieve what we want is because we just don't take action on it. So you will make mistakes. There will be instances where you're like, well, what do I do now? But unless you take that as a learning curve, you'll never really progress in any sort of investing avenue.
So would you say that a bit of that, the fear of the fear of the unknown, but then because you're dealing with a large amount of money, people are very skeptical of taking that jump. They'd rather, as we still at the beginning, put it in a bank.
Exactly.
And in real terms, getting no return on that money, but because they know they can physically go and get it any time. So it's a bit of letting go of that fear and taking the jump, you're saying.
Because I say, feel the fear, but do it anyway.
Okay. Just finally, the course that you went on, can we get the details of those?
Yeah, the details. The course I was on was Legacy Property Education, and they basically train you up within property and in all the different aspects of what you want to do.
Great.
Awesome. No, really, really insightful conversation with yourself. Brent. Thanks for coming in. We really appreciate that. And I just hope our listeners, you found that beneficial. And for those also watching on YouTube, please send in your comments and your questions. I'm sure Brent will be more than happy to answer that. Is there any way people can get hold of you?
Yeah, you can look at my Instagram on Brent_Sergeant. And also, you can go and contact the Economic Street guys and you can get through.
Perfect, we'll happily forward on any queries.
Yeah.
Lovely, guys. Well, it's been a pleasure. Thanks for tuning in and keep it locked. See you soon again.